Hey guys, hope you and the families are doing well. I'm going to take you through my entry in SMCI from the 25th of June 2025. We've got SMCI overlaid with the triple Qs because I'd like to teach you a couple of very important concepts when it comes from the trade identification and also the trade management. Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the description and the comment section below. So let's go gadget straight into the video. We'll do a high-level overview of the setup on the daily chart, then we'll start going down to the 5-minute chart, and I can teach you a couple of the intricacies when it comes to the trade identification, and then also how the session plays out from a trade management standpoint. And I'll teach you the very important concept to learn, which is intraday relative strength. And there's a couple of timestamps on the chart which I can then use to teach you about intraday relative strength. So let's just start off on the daily chart. What we can see is SMCI makes a pretty good move from around about 31 dollars or so, powers up here to close to $48, and then it starts at basing. Now there's a couple of points here. As it starts basing, the basing pattern that I generally see that's forming here is a Davis box, a period of consolidation, and from periods of price consolidation come price expansion. So from periods of price consolidation come price expansion. So when we see this base that's developing here, I'm thinking, okay, which way is the price expansion going to be? Is it going to be to the upside or is it going to be to the downside? And there's a couple of key points that I'll show you when we go onto the 5-minute chart in terms of intraday relative strength that I then look for when you start getting that price expansion. I've gone maybe a little bit ahead of myself here, so let me wind it back a little bit. Okay, as this Davis box is building here on the daily chart, what we can see is numerous touches around the 21-day EMA. This is just a little subtlety and a little nuance. When you get the leading stocks in the market, whatever they may be, I find the 21-day EMA is often a sweet spot moving average. That's going to be the blue line that you see there on my chart. So what I'm looking for here is when the stock makes a big move, is it going to find support? Is it going to be respected around its key daily moving averages? And what key daily moving averages may they be? So here we can see, in essence, pulls down to the 21-day EMA, also touches the 200-day there. You can see a little shakeout demand tail, I call this, underneath the 21-day EMA, but it closes above it. Next day, gap down reversal bar, so it gaps down, finds support off the 21-day and pushes. It trades up, pulls down, finds support around the 21-day EMA. Here, pushes up again, trades down, this time shakeout underneath the 21-day EMA. Now on this day here it does lose it, but this day here is quite interesting. Okay, because as it really starts rolling out of bed here, the next day you don't see any consistency of supply. There's no continued downwards pressure to, say, the 50-day SMA, which is the purple line on my chart. Actually, it just forms this inside bar. So it kind of catches a lot of people off guard. When you get these really bearish bars that slice through a key daily moving averages, a lot of weak hands panic there. A lot of weak hands exit. They go, that's me. I'm throwing in the towel. I was trying to get long this stock as it was trying to break out of this range. So you think about the breakout here. It was trying to break out here. Maybe they've got their stop loss place somewhere in here, and then what does this bar do? Well, it goes and shakes them all out, doesn't it? Okay, imagine if you were buying this breakout or you were buying this breakout somewhere in this vicinity on the daily chart. Where's your stop going to be? Underneath these lows, so underneath the 10-day EMA, last 2 sessions, 3 sessions, maybe you went for a wider stop underneath the top. What did that bar do? It just stopped you out. See what's going on here? Now, is it then a coincidence that 2 days after this, you start getting the breakout? I don't think so. These are the kind of games to train your eyes to. That when you're then expecting, well, this should now just really roll to the 50-day, it doesn't. Sign of demand, sign of absorption stepping up with this inside bar. Interesting, you're starting to see the psychology here for what's going on. Okay, large operators supporting SMCI at the 21, at the 21, at the 21, at the 21, at the 21. Load of breakout traders jump in here, and then they get shaken out here. And when they're shaken out, turns around and goes. Starting to see the psychology, starting to see the games. What I like to do when I am then looking for an entry on a day, if I'm going to use an opening range breakout as my order entry method technique, there's a couple of things that I'd like to look for. And what's really important to look for, I think, is intraday relative strength. There are specifics that I'm looking for in terms of the opening candlesticks and then intraday relative strength. So let's start off in terms of what are the specifics that I'm then looking for that I was then using when I was buying this position on the 25th of June 2025. Well, I call the concept bullish synchronicity. So what I'd like to see is there is a synchronicity between the positive price action and high relative volume confirming the move. So ideally the price action is really bullish, so you get a widespread candlestick, it opens on the low of the bar, closes very near the high of the bar, and then you have high relative volume confirming that strength. Why? Because that is my mental representation of there's a lot of demand, there's a lot of strength there. So are we seeing that with SMCI? Yes, we are. Okay, if I'm targeting, say, a 1 minute ORB or a 2 minute or a 5 minute or a 15 minute or a 30 minute or whatever time frame it may be on, this is what I want to see. A bar in essence that looks like that. Now, even better, if the bar that forms for the stock that I'm looking to target is stronger than the major index. Now, I'm going to use the triple Qs here because it's more tech orientated, so it's more applicable with SMCI being a semiconductor related stock. So if you look at the bar there, the first 5 minute candlestick for the triple Qs, okay, bullish bar, it opens here, tries to push, but there's what I call a little supply shoot. You see that? See that little kind of supply shoot, that upper wick there? Price tries to go, but someone somewhere for some reason, or some algo somewhere for some reason, sold into it a little bit. So what we're seeing is more strength in the opening 5 minute candlestick with SMCI relative to the triple Qs. Okay, so I like it. I like the context here of what I'm seeing in terms of this Davis box. Support around the 21-day EMA, as I was noting here. They're then catching the breakout traders offside. There's the breakout, rolls over, shakes them out, and then it turns around and starts to go. Shake them out, turn around, start to go. Okay, so then on the day that I'm then looking at it, because you get this inside bar in a leading stock around the 10-day, 21-day EMA and everything I was just saying here, SMCI is one of the stocks that I'm watching that session. Okay, and I'm looking for this strength, and then looking for what I was just explaining there in terms of the bullish synchronicity point. I'm then thinking about the risk to potential reward. So the initial risk on the trade is circa 2.86%. which is roughly half the 20-day ADR percentage, okay, around about 5%, okay? What I like to look for is my initial stop losses to be a third to a half, even better if it's a quarter, but a third to a half versus the 20-day ADR percentage. Okay, I'm just then keeping the risk in check relative to how quick the stock is. So if I was going to take an ORB on, let's say, a Microsoft or a Google or something like that, it's a much slower stock. A stock like that, like a Microsoft, okay, I don't want to have an initial stop loss like this, because my initial stop loss is very likely to be maybe 2 times the 20-day ADR with Microsoft. Whereas this time, SMCI quicker stock ADR 20-day average daily range percentage, meaning the average daily range percentage from low of the day to high of the day, excluding gaps over the last 20 days, is circa 5%. Making sense? So it's just a way that when I'm then looking for, say, if I'm going to use an ORB, because there's a gap up here, if I'm using an ORB, these are some of the things that I'm looking for. Now, what we then see is SMCI is then able to push. Okay, so the period from 9:30 to 10:05 is a really important period here. So if you look at what SMCI is able to do during that period relative to the triple Qs during that period, what do you notice? Well, the triple Qs in essence pushes up for 15 minutes, rolls over underneath session lows. That can happen quite frequently. Okay, the opening push then gets faded and there's a shakeout underneath session lows. Sometimes it will then reverse higher and it'll be a nice session and just trend up. Or other times you can see, okay, fails to then rally back, and then you just see generally lower lows, lower highs throughout the session, and it's going to be a weak day for the major indexes. But what SMCI does during this period from 9:30 to 10:05 is very important from a trade management standpoint, and also an intraday relative strength standpoint as well. So what I'm trying to do is hold the strongest stocks. Okay, when a stock is strong and continues to be strong in terms of relative strength across multiple durations, then I want to be holding the stock. Okay, I want to be holding the strongest stocks. I want to get rid of the weakest stocks, and I want to hold the strongest stocks. Unfortunately, our emotions normally try and get us to do the other thing. Okay, we sell the stronger stocks. Yeah, we'll snatch at that profit, and then the weaker, they'll come back. We want to do the opposite. Okay, I want to get rid of weak stocks, hold strong stocks. Rid of weak stocks, hold strong stocks. So what SMCI from 9:30 to 10:05 is telling me, it's strong. Okay, it's strong. Look, it's able to push like this, whereas the triple Qs is just starting to roll out of bed and flushing underneath session lows. Okay, when the triple Qs is flushing out underneath session lows around, well, at 9:50 and also 10:10, is SMCI anywhere near session lows down here? It's nowhere near it. This is strength. Now, what we can then see during the remainder of the session is that SMCI trades back down and then starts to turn around. At 1:40, these are Eastern time. Okay, at 1:40, when the triple Qs forms what I call a shakeout to Martel and makes new session lows, SMCI is all the way up here. Look how close SMCI is to its high of day. SMCI is up here at 1:40. The low of day is down here. Think about that. So the triple Qs has just gone lower low, lower high, lower low, lower high, lower low, lower high, lower low. Down here, new session lows. Relative to, let's say, it's lower the 9:30 bar, it's way off it. Look at this. It's way off it. SMCI is all the way up here. Is the stock telling me it's strong or weak? The stock is telling me it's strong. Strong stocks I want to hold. I want to hold them. SMCI is telling me during the session, hey, I'm strong. Hold me, hold me, hold me. So this is then what I'm looking to do. hold it. It's strong. I want to hold it. I want to be in the strongest stocks. I want to hold the strongest stocks. So these are some of the kind of nuances and the kind of day-to-day details of things that I'm looking for, and a little bit of the kind of psychology for how this base develops, how it catches offside the breakout traders who chase it in here, they get flushed out there, and then it goes like that. Then you get this nice kind of V-shaped pop in it. But then looking for, on the day of the breakout, looking for the intraday relative strength point as the session develops, and from a trade management standpoint as well. I'm thinking, okay, do I want to hold this one from an intraday perspective, or do I want to try and hold it as a swing trade? Well, if I'm going to hold it as a swing trade, I want to see this continued strength. I want SMCI to continue to prove I'm strong, hold me. I'm strong, hold me. Okay, when the triple Qs is flushing down like this, SMCI is not. It's just holding up way above the low of the day. So you're seeing strength in the morning, you're seeing strength as the kind of noon lunchtime period unfolds. You're then seeing strength into the close as well. This is then what I'm looking for from a trade management standpoint. So hopefully that video there is useful for you for understanding a little bit more in terms of the identification of an entry when you're using, say, an opening range breakout as the order entry method technique because of the gap here on an SMCI. Some of the details to be looking for in terms of the opening range candlestick, bullish synchronicity point, okay, positive price action being confirmed by high relative volume ideally, and then as the trade develops, or also thinking about the initial risk relative to the 20-day ADR percentage, and then also as the session develops, is the stock strong? Is it showing me strength? Is it stronger than the applicable index? I hope you guys have enjoyed that video. Thank you very much for watching, and as always, I look forward to seeing you in a future video.